Kowalczyk, Chief Investment Strategist at SJS Markets Limited. Dariusz, good morning. Thanks for joining us. So we're seeing, first of all, a little bit of a different picture today in trade, in and of that the yen isn't stronger for once.
That's true. Today, markets are behaving as if there is some recovery in risk appetite in line with rebounding stock indices. And that's why the yen is not being bought as a safe haven this morning. And the same goes for the dollar, hence its decline against European currencies. There may be some optimism that G7 may try to insert into its statement comments that would attempt to reassure investors. But unfortunately, I don't think they can do much, and any optimism will probably be short-lived and followed by another round of gains in the greenback.
Derek, unlike at the October meeting where they made mention of the Japanese yen and the rapid move or strength in that currency, they're not expected to really discuss the yen or have any kind of official statement at this meeting. Why don't you think the yen is as pressing a topic right now?
I think that even if the Japanese officials will try to talk about the strength of their currency, they will not find much sympathy among other members of G7 because every country is facing steep declines at its exports. So nobody would like to help the Japanese and give them some competitive advantage. Therefore, I really do not expect the statement after the meeting to single out the yen and its strength as an issue.
Dariusz, how much focus do you think that there's going to be on the Russian situation at the moment and on the Russian ruble, which has been falling considerably with the government trying to keep that 41 base intact?
I think that we will not hear anything in the statement about the ruble because it's not the major problem faced by the global economy right now, although behind closed doors there may be some discussions, and obviously the situation in Russia and Eastern Europe is weighing on European currencies. But again, I do not expect that we will hear any official statement about that.
Aussie dollar, Derek, we've been seeing some strength in that currency recently. We had some jobs numbers out that were better than expected. We've got, the stimulus package being passed in Australia now, $27 billion, about 2% of GDP. That's providing support. But will the support last for the Australian currency?
I think that unfortunately for the Aussie, the currency is in for a major decline, because my view is that all the stimulus and bank bailout packages announced so far will be considered insufficient to provide a quick turnaround either in confidence in global financial system or in terms of the economic output, and therefore there will be more declines in commodity prices, which will put downward pressure on the Aussie, and I'm forecasting that it will fall to 0.61 sometime during the spring before recovering late in the year to 0.70.
For now then, is there any Asian currency that you think is a good investment for investors out there?
I think that in the short term, say through the end of the first quarter, as global equities, I think, have to fall again, there will be some capital repatriation to Japan, and therefore the yen may again stand out as the winner, moving only modestly, maybe to 0.88 by the end of March, because investors will be afraid to push it further up, afraid of intervention from Bank of Japan.
All right, Derek, we have to leave it there. Thanks so much for joining us. Derek Kowalczyk, Chief Investment Strategist at SJS Markets. Now,